Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Laney and Bert, the Dividend Diplomats. We cannot wait to talk to you in this video today. We have a stock that is in a sector where it is rumbling, it is tumbling, and could this undercover dividend stock be the darling of a very high-profile sector?
Guys, before we check this out, smash that subscribe button. Give Bert the Hurt and I a nice thumbs up, guys, on the road to 19,000. Thanks for helping us get there. We ain't over yet. We ain't stopping. Bert, some big news. Hit the web here on the consumer sector.
Mhm.
And no, it's not Roaring Kitty. No, it's not GameStop. It is completely opposite.
Yeah, it couldn't be further from the truth. Chances are probably Warren Kitty, some of the other people involved in this are probably drinking a lot of these products here because as you're sitting in front of your computer for a while, somebody's doing something here. Man, oh man, Lanny. Let's talk through this. Today, we're covering this dividend stock in the soda sector, but we're not covering the two giants, Lanny. We're not covering Coca-Cola. We're not covering PepsiCo. Today, we're talking about Keurig Dr. Pepper, ticker symbol KDP. Man, Lanny, what was the news this week that shook the soda can up and just popped the top and sprayed it everywhere?
Well, Dr. Pepper and all 23 flavors, guys, passed Pepsi as the number two beverage brand out there, guys, dethroning the second punch in the KO Pepsi battle here, guys. Number two, Dr. Pepper. Let us
Yeah.
know if you guys crack a can of the 23 flavors.
You know this, Lanny. It's my favorite of the sodas. I love a great Dr. Pepper every once in a while. It is. I will take that over Coke or Pepsi all day. But it is important to point out that, and you said it right before we start recording, and many people let me know this on X when we put the tweet out there, or the post out there. This isn't the full portfolio. It's not as if Dr. Pepper is now a better company than Pepsi. Pepsi still got the full Pepsi Frito-Lay portfolio. This is just specifically soda.
Just soda, guys, but it ain't just soda. We're
No.
talking iconic brands being
Mhm.
dethroned here. Who's next? Is it Coke? But Keurig,
Mhm.
again, just isn't Dr. Pepper. So we're going to look at
Yeah.
this as a dividend stock. We're going to look at the metrics. We're going to look at what Dr. Pepper Keurig brings
Mhm.
to the table here, guys, to see if this is a stock possibly for your portfolio, to see how many billions of dollars this company generates in cash flow. And hey, how well does this company actually perform when it goes to the bottom line?
Yeah, and let's start with the quick history here because it was pretty interesting because they have a unique niche here in this sector that's a little bit different than Coke and it's a little bit different than Pepsi. Coca-Cola has the massive brands, the massive international distribution. They are just the powerhouse in the sector. Pepsi has the soda, the waters, everything, and the massive snack business. Keurig Dr. Pepper, it was different. In 2018, you had two companies that combined. You had Keurig Green Mountain, the coffee powerhouse in one house, and then Dr. Pepper Snapple Group, the beverage group, in the other house. They combined in 2018, and here they are. They're one massive company. So Dr. Pepper Snapple in that soda division, you got your names like you got your Dr. Pepper, your 7 Up, Canada Dry, Schweppes, Crush, Body Armor, Snapple, obviously, Mott's, Sunkist, RC Cola, Fiji water, and so some big names in there. So obviously they have the brands individually to compete with Coke and Pepsi, but like we joked around about before this too, Lanny. How many of these besides Dr. Pepper are you actually being like, yeah, these are great quality beverages?
You know, if I'm reaching for root beer, I'm going for Barks, to be honest.
Yeah.
7 Up is good. Kind of when I was younger with my Nonna Gina, yes, my
Mhm.
Italian grandma, she would give us wine with a little bit of 7 Up in there,
Yeah.
guys, when I was growing up.
Yeah, my
Uh,
my grandma had the little Canada Dry cans, like the little mini ones underneath her sink.
nice.
Yeah.
Yeah. So, I mean,
The other
you know,
funny one in this too, Lanny, is RC Cola. It's what my mom used for our briskets growing up. You taste RC Cola, it's still disgusting. But you put RC Cola on top of a brisket and put that brisket in the oven, hit the spot.
Hey, that's Cola. Why not, man?
Yeah.
Got to compete with Coke and Pepsi with some form of similar, beverage
Yeah.
there.
That's half the
Um,
company, though. There's the other half of the company now that
yeah,
exists too, with the Keurig Green Mountain side, which has obviously Keurig, which pretty self-explanatory. Green Mountain coffee, fantastic coffee there. Pete's Coffee, and they have a lot of the distribution rights for what your your Starbucks, Dunkin'. So they don't own the brands, but they have the distribution rights, which are huge, especially when you see them in the grocery store on that shelf.
insane, guys. I mean, a pretty nice portfolio here for, entirely, beverage outside of the Krispy Kreme donuts.
Yeah.
Um, but it's going to get interesting because it's like, well, how do the metrics look like? Is this an actual stock that you'd want to own for your portfolio, whether you're a dividend investor or growth investor? Does this company reward its shareholders? Total return, dividend growth, we're about to find out.
Yeah, let's run them through which has our screener, which has three metrics: PE ratio, payout ratio, history of increasing dividends, and that bonus metric, dividend yield.
Oh, that sweet dividend yield, guys. Now, again, this is Keurig Dr. Pepper, KDP. We are filming this here Thursday, June 6th at night, guys. Again, this company, by the way, generates. Is this a quarterly
Yeah.
snapshot, real quick, or is this
Yep.
an annual?
Quarterly snapshot. So 3.4 billion of revenue quarterly. It was up 3.6% from last year. Earnings per share 33 cents per quarter. So it was just in line with there. So they're just a solid company, not the highest revenue earner. They just delivered the results.
Man, earned 33 cents in line,
Hmm.
reaffirming guidance,
Yeah.
looking at growth in the mid single digits. We'll
Solid.
have to, yeah, I mean, they're showing a lot of optimism, right? But
Mhm.
what do those, DD stock metrics look like, guys? Guys, we're putting them in our ring here to see if they pass the DD test, see if they pass Bert's muscle, see if they pass Bert's beardless face here, guys.
Yeah, that's right. And what we're going to do here, we're going to share the metric. And we're also just going to quickly go through the Pepsi and the Coca-Cola comparable metric there just to see how they stack up against their obviously industry titans. Lanny, you want to kick us off here with that price to earnings ratio for KDP?
I would love to, guys. Trading at $34.51, expected earnings of a buck 92. It is down. And, if you haven't caught the recent videos, Pepsi's historically been in the low 20s. KDP is below 18 at 17.97 price to earnings ratio.
Yeah, so as you said, Pepsi's PE ratio right now is 21, Coca-Cola's 22.75. So KDP is the cheapest of the soda beverage stocks right here.
Yeah. What about that payout ratio? How safe
Yeah.
is the dividend that they do pay? Is there room to grow, or are we scared for a cut?
You bet there's room to grow, Lanny. So that payout ratio is 45% when you round it up. It's 44.79%. That also is much lower than the industry peers. Pepsi's payout ratio is 66%. Coca-Cola's is 68.79%. So plenty of room to keep chugging along and popping up that divvy.
Now, not quite the dividend king like their competitors are with Pepsi and Coke, but Dr. Pepper, Keurig Dr. Pepper stock has a few years, 3 years of dividend growth at an average rate of 13.43%. So definitely like 2x what their competitors typically do. So you gotta love the dividend growth from KDP.
Yeah, and they were flat up until they started growing it 3 years ago. So they merged, flat dividend, and now it's just shooting up there. So they have the room to grow too at that 44% payout ratio. Now their
Let's be
yield,
real.
yeah, their yield is 2.49%. So we'll just round it up to 2.5% for comparison's sake here. Which is pretty solid. I'm not gonna lie. That's not bad compared to Pepsi. That's 3.31% yield, and Coca-Cola's is 3% yield as well. So you know what? A little bit less on the yield, but it's offering that higher dividend growth combo.
I tell you what, and they have been pretty flat this year. Not any appreciation from a stock price standpoint, up 11% from last year. They are outperforming on a 52-week basis compared to Pepsi. which is at 4.6% down, and Coke up 6.37%. So appreciating much faster than the other two consumer beverage and snack companies.
Yeah, so it's an interesting going through KDP. Again, to summarize, their PE is 18, payout ratio is 45%, 5-year dividend growth rate of 13%, increased it for 3+ years here with a yield of 2.49%. Comparatively, when you put them next to Pepsi and Coke, lower PE ratio, lower payout ratio, higher dividend growth, lower history of increasing their dividends, and a lower dividend yield. So how do you feel about them leaving this analysis, Lanny? Just what's your initial gut reaction?
Obviously convenience from the Green Mountain Keurig, brand, that's not going anywhere. I have to look at like really the patent side of that, by the
Yeah.
way. Um, in good company, obviously they just don't have the long runway that Pepsi and Coke have, and they don't have the snack brands that Pepsi has. Um,
I agree.
stock to watch, but a stock that I'm not like running to buy.
Yeah, I agree. And if you're going to talk about brands that differentiate from this portfolio, it's kind of been the theme of what we've been saying here. Outside of Dr. Pepper, what in their brand portfolio? Sure, they have a very diversified brand portfolio, but like what brand from this list outside of Dr. Pepper stands out where you're like, you know what, this company's is the best? Because I can tell you what, Pete's Coffee is not the one I'm reaching for on the shelf when I see it.
No, you're not reaching for Pete's.
No, not really. That's not my cup of tea, I should say, or cup of coffee, as they would
You're
say.
you're not, you're not just pounding those K cups, man.
No, but you know what? From the metric standpoint, they're the cheapest in the sector. They're rightfully in third behind Coke and Pepsi from a metric standpoint. If you're looking for a great stock, you like the brands. It's not a bad company. It's just not on my watch list either, Lanny. I'm with you.
What about you guys? Do you guys own KDP? Are you looking to buy the stock? Is there other and better stocks out there right now here in this trailblazing 2024?
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt Locker, and Lanny from the Dividend Diplomats. Over and out.